I just made $40 million trading this morning and just bought a $6 million house. Let's go do a house tour. Oh, it's locked. I guess we'll have to do it another time. All jokes aside, trading has drastically changed my life the past 4 years, and I'm excited to share with you the only strategy you're gonna need for 2026 to change yours. And I think you're gonna be pretty shocked to see how simple trading can actually be. Let's go. Welcome to the only Forex trading strategy you're going to need for 2026. The reason I say that this is the only Forex trading strategy you're going to need for the entire year, it's not because it's some, secret algorithm that I developed. It's not some hidden indicator that once you turn on, you're going to never lose a trade again. I tell you, it's the only Forex trading strategy you're going to need for 2026 because one, it's simple, two, it's effective, and three, with a little bit of discipline and consistency, I believe any person on earth can trade this strategy. Guys, it is so simple to understand that I have literally taught this strategy to thousands of traders. And I am not joking when I say thousands of traders, hundreds of which are now profitable, making full-time income from trading. And so, this is the exact strategy I use every morning. This is the exact strategy that I've taught to hundreds of students, and the one I'm going to lay out very simply for you here. Before I do that, though, I wanted to really talk about why most strategies are going to fail in 2026. 2025, we saw a shift in trading. And I believe the shift happens because a lot of people think, like, oh, we're trading from our phone. We have so much power. Like, as retail traders, we really don't have a lot of power. Trillions of dollars are traded through the forex market. So when you're making even $100,000 a day, that literally affects the market zero. I'll tell you who does affect the markets though are these big banks and institutions. And I tell you that not to scare you, because a lot of times when you hear those things, you start jumping to strategies. Oh, how to trade with the banks, how to trade institutions. Let me learn these huge smart money concepts and all these huge words that nobody knows how to pronounce. And it's going to lead you to failure because the markets are changing. There's more fake moves. I say there's more algorithms, there's more stop hunts. I feel like there was a lot more chop this last year, and there's just less follow through with trend breaks. And all that sounds very scary. But I want to tell you the reason it sounds so scary is because you're approaching the markets from such a unclear headspace with a strategy that's not simple. And that's why I want to teach you a strategy that is so simple that it sees through all this stuff and it allows you to actually trade with clarity. Because when you're thinking about all these different things and all these different manipulation tactics that could be going on, it's like it's really paralyzing. And my goal is to free you up as a trader so that you can make the best, educated guess possible on where price is going. Now, with that being said, most times, and I would say 99% of the time, the strategy is not the problem, you are. And now I can make 30 million videos on why this is the case and why this matters the most, but that defeats the purpose of this video. I want to hop into the strategy as quick as possible, but hear me out for just a quick second. Most people go through dozens of strategies a year and they don't even know it because they're trying to scalp, but then they're trying to swing trade and they're thinking, oh, I'm trading different pairs, doing different things. I'm not really strategy hopping because it's, completely different spheres. But all of it is taking up space in your brain. And you have to realize that when you're not consistent with one thing, you're never going to see the results that, consistent people are. You see traders like Mamba FX, myself, Alex G, and you wonder, like, why do they do the same thing every single day? Whenever they are live trading, whenever they are teaching people how to trade, it seems like they've been teaching the same stuff for years. They have. Why? Because it works. So all I'm going to ask you to do here, I'm not going to go off on a rant on how you need to fix your whole life and you stop being greedy, all these types of things. I just want to ask you, as we go forward in this video, can you just commit right now to sticking with this strategy for at least 3 months? See the results, and then you're never going to go back. Because the more you strategy hop, it's just going to keep resetting progress. So really quick, if you could hit the subscribe button, we're going to hop into the strategy right now, but I'm trying to grow this channel. I believe that we can build a pretty sweet community together, and I'm excited to grow this channel, make more videos for you guys. So subscribe, comment below what video you want to see next. My next video, I'm literally going to pick from the comment section. So what's working now? We already talked about what's not going to work. What is going to work? Simple structure, clear levels, having patience, and executing with consistency. I should have just put consistency on here as another line because that is the most important thing. But the theme here is making very, very sound decisions with a simple process. That is what's working. And that's what has worked all of 2025, 2024, 2023. And while I've seen, the markets change a little bit, I've seen these institution and banks targeting retail traders a little bit more. So again, more fake outs, more stop hunts, all these types of things. The people that are getting affected the most, in my opinion, are the people that don't have a sound, simple strategy that they're staying consistent with. So the only strategy you're going to need is a breakout strategy at New York session open. So that's 9:30 Eastern time. If you're from somewhere else in the world, just do the math. Google is a thing. But we're just going to focus on US 30 and on the 15-minute time frame. And the reason we're doing this is because once you learn the basics of something, you can start breaking the rules and start adding a couple more time frames in, doing things like that. But I want to keep it as simple as possible for this video. And I'm going to show you at the end that there are different levels that we can go to with this strategy. And so after month 1, you can, graduate to level 2 and, add a little bit more complexity into the strategy. But again, we're not changing the strategy. We're just adding a couple layers to risk management to make it more profitable. But right now, you have to understand it's not about profitability. It's about understanding. So we're going to trade US 30 on the 15-minute time frame, 9:30 Eastern, and we're going to trade a breakout strategy. Now, I want to go over some very simple concepts before we get into how it all pairs together, because I believe that if we do that, we're going to be set up for success the best. So let's first just talk about market structure, because if you don't know where price is going, literally nothing else matters. So simple things like higher highs, higher lows, lower highs, like that's it. Like structure is going to tell you bias, indicators don't. So we're going to have 0 indicators on our chart for this strategy. Now, let me go actually over to this trading strategy video, and let's just talk about simple market structure. Like, let me just go to a random place. Let's go like right here. I'm going to put 2 vertical lines down. So these two lines right here. Let me just make sure you guys can see it. Yeah. And I'm going to ask you, like, where is price trending here? And you might say, oh, it looks like it's moving sideways. But we need to understand that, like, when we have I just accidentally reset it. When we have a market to where it is, here's a high, here's a high, I guess you could say here's a high. This was trending downwards for a second, and then it started trending upwards, and it almost looks like this was kind of like a fake move, and then it went to another lower low. And now it's starting to break out and go a little bit sideways. But for a little bit, this was trending, downwards. So it's just like small things like that. I know that is so simple. A lot of you guys can understand by just looking at a chart, hey, it's going down, but you'd be surprised how many people will see, structure like this and be like, oh, it's moving sideways. When if you actually just do a little bit of quick math, you'll see that it's not actually moving sideways, it's moving down. And all that does is that just gives you a bias. And the bias is so important because when we're trading with our trending bias, it just means we can be a lot more confident in what's going on. If we don't know what the overall structure of the market is, and typically you're going to want to do this on higher time frames anyways. So like right here, let's say like what's going on recently. Yeah, there's a big drop. But what have we been doing since December 18th? A low, high, a higher low, and a higher low literally just means that this next low is higher than this one. So what does that mean? We're going up. And you can just see it's a little staircase going all the way up. And again, I'm telling you that because we need to understand structure very, very effectively if we're going to really master this strategy. So the next thing I want to talk to you about are key levels. Now, you have to hear me very clearly. Levels are everything. Support, resistance, again, highs, lows, previous day levels, weekly levels. Institutions react at levels, and retail traders typically chase in the middle. So we have to be patient, let price come to us, but also maximize profitability by leveraging key levels. So let's talk a little bit about key levels. Now, key levels, you have 2 different ones. You have whole levels, which are basically like $48,000. At $48,000, let me put it kind of like right immediately. You're going to see like we've had like some pretty intense structure right around there. And those aren't as important, but just understand like when you're getting next to when you're nearing pretty whole numbers, 50,000, 48,000, just stuff like that. There's this theory called the quarter level theory. I don't want to get into it too complicated, but just understand that humans are humans and we like patterns. So when we're at things like 50,000, like you can see, like we went all the way up just under 49,000, and I won't go there actually. So the whole point of that was to say that be a little bit cautious when we're nearing, very specific whole round numbers. But what's more important is understanding key levels, is understanding that levels are not. So if I were to ask you, what's the key level here? A lot of you guys will just go to the very top and put a horizontal line and say, oh, this is the key level. In reality, that's just not it, because you're missing out on a ton of structure. So we have to mix in structure with key levels. The way we do that is we want to think of price and levels as a zones. So levels are zones. Now, this doesn't make any sense because I'm just boxing the whole structure, but let's just say, what's the key resistance level here? Again, it's not the very top, it's the average of this whole area. So what I typically do is find where the majority of the bodies are, and I'll average it out. So look, we have a bunch of bodies down here and a bunch of bodies up here. So I'm going to put my bodies like right in here. And then I'm going to look at the wicks. Okay, we have a wick coming up here, up here, up here, there. And then there's a lot of wicks down here. So I'm going to say like actually like something like this is going to be our key level. And if we go to the bottom down here, a lot of you guys are going to go, oh, okay, well there, it touches the bottom down here. And look, we had a breakout down here. But look, if we had the actual correct level in place, so something like this, where, we're averaging these bodies out a little bit, maybe extending it a little bit because this wick is pretty big. You can see we're just basically taking the whole average of the area. We could have caught this move. And look, that's an extra 30 points. That's a whole take profit for this strategy. So when you have accurate key levels, when you're targeting areas, and again, I'm just peeking over at the numbers over here. I want to make it clear you don't have to do that, but it is helpful when you're nearing whole round numbers. So like 40K, 50K, to just keep an eye on it. But for the most part, your key levels are going to be given by the structure that's going on. Just make sure you're not targeting the outliers. So when I say the outliers, I mean the extremities of the structure. A lot of times, again, people are going for the bottom and the tippy top, and they're missing out on a ton of points. So now we need to talk about timing, because this is going to be the hardest thing to talk about. And if you're tracking so far, I'm glad you're here, because this is going to be the part where a lot of people will check out because they don't want to put in the work. I can't fully explain to you the timing of a breakout. And the reason I say that is because it's volume dependent. Now, volume just simply means, how much trading is actually going on. When there's a lot of volume, the charts move faster. And again, explaining this simply for you guys, because I don't want you to overthink the strategy. Volume is something that has to be trained. Like there's going to be sometimes like you're going to think it's pushing up. And for me, I'm not going to get in that breakout because I just have seen that type of volume before. I know it's going to reset and then go out here in a little bit later. It's not something that I can just like show you and give you examples of. It really is something that you have to train your brain. So that's why the first few weeks of the strategy is just focused on taking good entries and really focusing on volume. Now, the timing of this whole strategy is again at 9:30 Eastern. We're going to mark up the charts. Let me actually just go over here to the remove. So for me, I'm going to go to the 30-minute time frame. I know we said we're on let's go to let's see. Wednesday at 9:30. We had a pretty big breakout. So this candle right here, I'm going to put with a vertical line. This is the candle when market opens. So we have to be on the charts about 5 minutes before and look for, our key levels. So if I were to look in this area and say, hey, what areas make sense right here? So I am going to note that this was a huge push, but understand, guys, this was a huge one candlestick push. So what if I just didn't even worry about this at all? Like, what if I just put a line at the very top, I'm going to average the wicks and the bodies. So maybe somewhere like right in here. And then what if I say, all right, let me just ignore this for now, because this could be a good TP level. But I'm going to see where price is at. So price is around here at, 9 o'clock, 9:25 in the morning. And then I'm going to look for a breakout to the downside. Now we have some structure down here. We have some structure, right in here. And I think I'd probably target something like right in here. So we would target somewhere right in here. If you wanted to go a little bit more extreme, you can. But again, I'm looking at a whole bunch of candles right around this area. And I just see like, again, one candlestick push that caused some structure down here. Again, I'm not going to hate you if your first week or two you're targeting this instead of this. But remember, our goal is to maximize by using the right key levels. So this is where we would look for breakouts at market session open for sells, which it does look like there was, and there was a TP1 that hit. So even before this skyrocketed and went crazy, you actually could have caught a win to the downside first and then waited and then caught another win to the upside. But when price is here, so now I'm going to put a horizontal line. This is where price opened at. So we need to make sure that we're finding a level that's above here. And there's really not much going on here, so we might actually have to target some structure from the past. And when there's not a lot of structure, so when there's not a lot of candles in the area right above where price is, again, because we had this big push right before market open, we have to get a little creative. So in this is a fun video because you guys are going to see how I would have thought. I would have seen this little bit of structure build up, and I would have counted these wicks. Again, I'm not taking into account this big ass candle that happened. I'm just looking at the other candles that were around it. So somewhere in like right here, looking at this, I would have probably put my line like right here. And now that's a little bit aggressive. So now I'm going to see like, hey, look, price is already close to here. And again, we want to make sure that we're not just going to the key level that's the closest to price. We want to find an area where price could actually break out from. So I'm going to go look in the past and see, does this level make sense? Like, is there any way I can go a little bit higher on it? And I'm looking, like, there's some nice structure here where it looks similar. We've had a huge wick push through this area before, but there's really not much going on here. So today would have been or Wednesday would have been a very unique day where we would have had to just kind of trust our instincts and trust our experience and say, okay, well, we have to target this area, this whole structure right in here. And really the whole bit of structure is right in here. So with all these wicks. So if I were to take, the majority of where the tops of these bodies are in here. So let's say like, and it has to be above this candle. So these right in here and these wicks, we probably would end up somewhere like right in here, just averaging out the wicks a little bit. This is a little bit harder to see, but you guys kind of understand where I'm going. If you wanted to keep it simple, again, you could have just targeted this bottom bit of structure and this top bit of structure, and you would have been just fine. You probably would have got faked out to the downside, but then you would have caught a huge move to the upside. But when we have accurate levels, we're able to take advantage of even the fake outs. So when I say there's more fake outs that are targeting retail traders, you can see right here when most traders are targeting the very, very bottom, we're targeting very clear levels. And this is a little bit hard to explain on one YouTube video. This is why I do, one-on-one coaching. If you want to know about that, just hit the link in the bio. But this is where the training and expertise and just training your mind to see what I'm seeing helps. And that's why, like, up here, yeah, we would have caught a huge win up here, but look how much we would have missed if we would have got in here. We would have missed almost 2% of profit. So TP2, if we would have just got in right here. It's pretty sick. So understanding key levels is very important. And the whole idea of this whole section is to understand the average area. That's all I'm trying to say. If you have any questions, again, let me know. I'm trying to keep this as simple as possible, as simple as I can, and a 20-minute YouTube video. But you have to realize that this is where profit is actually made is risk management. So that's why with this strategy, what we're gonna do is here are the steps to the strategy. At 9:25 in the morning, you're going to mark up your key levels around where price is trading at right now. So a little bit above and a little bit below. Find the areas where price could break out from because those levels are strong. And then at 9:30, once market opens, we're going to wait for volume to come in and start pushing above those levels. So we're not going to get in the second it passes that level, right? We're not going to get in the second it passes that level. We're going to get in, after it pushes a few pips in, we're going to be like, okay, we're going to have to, this is where the training and expertise comes in. We're going to have to notice the volume a little bit. The volume, if it's pushing very fast, I'll just leave it that simply. Okay, we might consider entering the trade. But if it's just like, if this is the level and it's just pushing up, kind of hovering, we're going to wait a second and let price tell us what it wants to do. We're going to have patience. So remember when I said patience is going to be super important? A lot of people are entering these breakouts right the second it passes your key level, quote unquote, and it's not really a breakout because remember, levels are subjective. You know what I mean? Like what I call a key level, a bank might be a few pips above or a few pips below, that type of thing. And so we have to realize that we have to react. We can't just jump in the second something happens. We have to react to what the market information is giving us. But once we do that, all we're going to do is we're going to target a 1-to-1. So our stop loss is going to be 35 points and our take profit is going to be 35 points. And we're going to risk 1% of the account. That's level 1. Once we have that down for 2 to 3 weeks, we're going to go on to level 2, which is you can up the risk a little bit, not too much, but then we're going to go for a 1-to-2, and then we're going to put our stops to break even at 1-to-1. What that means is once price hits 35 points in take profit, we're going to actually move our stop loss to break even so that if price comes down, we don't lose the trade. We're just playing with house's money at that point, but we're going to target a 1-to-2. And then level 3 is a trailing stop at 1-to-1. Now, this is a little bit more complicated because a trailing stop it's a bittersweet thing because sometimes you're going to trail a stop and it's going to get stopped out and then go forever. But trailing stops are the most profitable way to trade because how I do it anyways. And the way we do it is at TP1, we're going to set our stops like 10 points below where price is. So 20, if we're taking 35 point take profit, we're going to put our stop loss at 25 points take profit. However, as price pushes up, we're going to lag our stop loss a little bit and give it more and more room. So let's say price gets up to 200 points. You're not going to, in profit, you're not going to have your stop loss at 190. You're probably going to have it at like 100, 115. And we're just going to milk this thing as far as it can possibly go and just get wider and wider and wider. Because at that point, you can just decide when you want to get out. But that takes a lot of discipline, a lot of consistency, and we'll get back to that. I'll make some more videos on that. And if you have any more questions, again, you can hit me up on Instagram or anything. But the reason why this strategy lasts is because it works in trending markets. It works in choppy markets. It works when volatility spikes because it's based on how price actually moves, not predictions. Like I'm not trying to guess where price is going. I'm reacting to what price is telling me at a time where I know there's a lot of information to be told. So I want to invite you guys to master this strategy because the traders who win aren't smarter than you. You've probably seen some pretty dumb guys online who, if they didn't have trading, Lord knows what they would have, but they're way more profitable and they're making way more money than you. And that's just because they've mastered a simple strategy. They're just more disciplined. Even with the same setup, same rules, they just do it over and over again more consistently than you do. So I want to invite you guys into that. And if you really want to master trading in 2026, I want to let you guys know that my schedule is opening up. Again, I worked with some of the top traders this past year, and I was actually running their mentorships, teaching thousands of traders under them. And yeah, things have shifted, and I have a more wide open schedule. I'm actually open to taking on more students. So I am looking to mentor a very small group. You're going to have some group sessions, some one-on-one sessions. Just 3 to 4 people and walk them through this exact framework, teach them how to do this consistently and profitably. So if you are interested in that, hit the link in the description, fill out the application form, and I'll get in touch with you. Yeah, that's really it. Fill out the form in the description if you want to master it. If you're tired of hopping strategies and want something you can actually master, stay tuned. I'm going to be sharing more. And guys, I will see you in the next video. If you have any questions, leave them in the comment sections. I will, again, make any videos you guys want me to. I want this channel to become a pretty beautiful community. And I'm just so excited you guys are here. Looking forward to growing with you guys, teaching you guys everything I know. And seeing you guys become profitable is genuinely one of the most satisfying things that could possibly happen. So I am excited for 2026. I look forward to seeing you guys a ton on this channel, and we'll catch you in the next video. See ya.